By looking at Apollo's sector bulls, we can see how Apollo has added huge value throughout the last 3 difficult months. In this example, we're going to focus on the autos. By clicking on Transport Equipment within the list of members, we highlight the sector in yellow. Although the sector currently has a neutral risk according to our normalized risk score of -5 to +5, it now has a negative 2-month expected return because of the recent rally. However, we can look back to see how the relationship between risk and reward has moved over time. Interestingly, we noticed that in the second half of November, the auto sector was pricing in more risk than any other sector in Japan. You can see they had the most negative risk score. By opening the chart tab, you can see the highlighted sector index. Our observation that this was trading at extremes both in terms of discount to fair value and risk meant that despite the declining value trends, this was a very attractive trading buy, at least back to value. As we play the relationship forward, you can see how the sector gains mean that the expected return eventually turns negative and risk is no longer priced in. By double-clicking on the bull, we can see what happened at the stock level. And again, if we take the bulls back to late November, we can see which stocks were offering the best risk-reward at the time. We can see very clearly that Honda and Toyota had the most risk priced in and the best 2-month expected return of all the autos. For clarity, the bulls above are auto parts. Again, by selecting Toyota, the crosshairs show the date and the price in the chart, and we can see what a good signal this was. If we play the relationship forward, we can see the same changes as before. Risk increasing and reward decreasing. Both Toyota and Honda have now rallied back to a premium to fair value, as seen in the chart. They are both above the orange fair value line. To bring up the stock view, you either double click on the bull or click on the chart button. So looking at Honda Motor, we can see Apollo's conviction from the middle of November, as the stock was a 4-star green from November the 10th up until November the 21st, as it reached a value extreme and, as we know, a risk extreme. Further, in terms of long-term value, the stock registered as a long-term buy during August and September, as indeed it had during June 2010. So Apollo called the bottom in the Japanese autos, showing why it was the sector to pick in terms of risk and expected return. Moreover, it was also clear why investors should have focused on Toyota and Honda. Happily, the autos have been the 3rd best performing sector over the last 3 months. But just to show off, guess where the brokers and shippers were, which have performed better, on the sector bulls 3 months ago. So that's how Apollo saw the Japanese autos, and why you need Apollo to sit alongside your investment process.